Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Avenue Therapeutics, and let me tell you, it's a bit like watching a tightrope walker without a net. We'll see if they manage to land on their feet or take a tumble. So Avenue Therapeutics filed what's called an 8K report. This is basically a quick update companies give to the Securities and Exchange Commission, or SEC, about major events that could affect their business. Think of it as a corporate breaking news alert. This report is dated March 17, 2025. It's important because it talks about Avenue Therapeutics potentially getting kicked off the Nasdaq stock exchange. Getting delisted can make it harder for investors to buy and sell the company's stock. Here's the gist: the Nasdaq stock market, or Nasdaq, sent Avenue Therapeutics a letter. It said Avenue stock was going to be delisted. Delisting is when a company's stock is removed from a stock exchange, which makes it harder to trade. Trading of Avenue Therapeutics common stock will be suspended at the open of trading on March 19, 2025. Why is this happening? Well, Nasdaq has rules, and one of them is that companies need to maintain a certain amount of stockholders' equity, which is like the company's net worth. In this case, at least $2,500,000. Avenue Therapeutics was below that. They didn't have enough money in the bank, basically. Back in November of 2024, Nasdaq warned Avenue Therapeutics that they weren't meeting this requirement. Avenue Therapeutics asked for a hearing to appeal the decision. The hearing panel gave them a chance to get their act together. They had to publicly announce what they were doing to increase their equity by March 14, 2025. Unfortunately, Avenue Therapeutics didn't fix the problem, so Nasdaq decided to move forward with delisting their stock. Now, what does this mean for Avenue Therapeutics? Nasdaq is expected to file a Form 25 with the SEC. This form officially removes the company's stock from being listed on Nasdaq. The company stock is expected to start trading on the OTC market system under the same ticker symbol RTXC on March 19, 2025. The OTC markets is a less regulated, less prestigious market than Nasdaq. It is often used for smaller, riskier companies. While they plan to continue filing reports with the SEC, the company admits there's no guarantee their stock will continue to trade on the OTC market, or if brokers will even offer quotes for it. Even if it does trade, there's no guarantee their stock will continue to trade on the OTC market, or if brokers will even offer quotes for it. Even if it does trade, there's no guarantee there will be enough buyers and sellers for it to be an efficient market, or if brokers will even offer quotes for it. Even if it does trade, there's no guarantee their stock will continue to trade on the OTC market, or if brokers will even offer quotes for it. Even if it does trade, there's no guarantee there will be enough buyers and sellers for it to be an efficient market. Before we move on, let's talk about forward-looking statements. This report includes a section called forward-looking statements. These are basically predictions about the future. Companies put this in their reports to warn investors that things might not go as planned. They use words like anticipate, believe, expect, and intend to show they're making educated guesses. Avenue Therapeutics is very upfront about the risks they face. The company has no drugs on the market right now. They are dependent on new drugs being approved, which is a long process. They have 3 drugs they are betting on: AJ201AV, Tramadol, and BA1I1, but there is no guarantee any of them will get approved. There's significant doubt they can even stay in business, which may hinder our ability to obtain future financing. They've lost money since the beginning and expect to keep losing money. They need more funding, which might not be available. This could force them to stop or slow down their product development. Trading on the OTC market also brings risks like less trading activity and less regulatory oversight. They rely on other companies to do many things for them. The results of testing by other companies could be wrong or not good enough for regulators. Even if they get approval for a drug, it will still be watched closely. The company also has to deal with laws and regulations about fraud, transparency, and health information privacy. There's a lot of competition for their products, and new, better products could come out. The government or insurance companies might not pay enough for their drugs. They might not pay enough for their drugs. They might not be able to sell their products themselves or find someone else to sell them. Fortress Biotech controls most of the voting power and gets a lot of shares every year. This means they have a big say in what happens at the company. The company could lose important rights if they don't follow the rules of their licenses and funding deals. To Fig, so what's my take on all of this? Avenue Therapeutics is in a tough spot. Getting delisted from Nasdaq is a major blow. It makes it harder to raise money and can shake investor confidence. The fact that they're moving to the OTC market, which is less regulated, adds to the risk. It will limit trading activity because there will be fewer people that can trade it due to it being a riskier asset now. On the other hand, they are working to get drugs approved, but that's a risky and expensive process. There's no guarantee they'll succeed, and even if they do, they'll face a lot of competition. Overall, Avenue Therapeutics is a high-risk, high-reward investment. If they can get their drugs approved and successfully commercialized, they could be a big winner. But there's also a significant chance they could fail. The road ahead looks bumpy. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.